Welcome to the Ag Web Weekly Market Wrap, and I'm talking this week with Jerry Gulke from the Gulke Group. What's really going on out there?
Informa came out this morning and did what a lot of traders thought that would happen. At least that was on the floor of the Board of Trade. The farmer likes to plant corn, and Informa, through their survey, or they're calling their people clients, said that about 780,000 more acres of corn, which gets us closer to the 90 million mark, 89.6 they're at. Soybeans actually up 360,000. So we're increasing total acres, and if you recall, last year we had some prevent planting, I think a couple million acres in North Dakota and almost 1 million acres in Illinois. Odds are what we're seeing is the total acres coming up because we had higher prices. So that would lead a person to believe that more corn is going to go right to the bottom line of the carryout, and we certainly are off to a good start that says, I think with what happened with China coming in, and we had all hoped and suspected that would happen at some time, but we didn't know when and how much, and that's still the question. But when they came in was at a price that we had just fallen greatly right after the fact that we set a record almost twice what we'd ever done in planting performance, and we had a big down day over a week ago. Real hard the next day, here comes the news that China is going to buy. Well, they had already bought some, and now the thought is that they've been accumulating some of this. We've seen big exports, and where they bought it was almost like telling me, like a boxing glove coming out of the television, hitting me and saying, Jerry, if you don't want to feed it and burn ethanol with it or export it, then we'll buy it. We have use for $3.55 futures or $3.75 futures, and that has probably raised the bar as to how low we can go. And I think we put it in our back of our mind that 2 billion bushel carryover isn't what it was 20 years ago. So I think to suggest that there was a time we said there's nothing you can do with $5 corn because cattle can't eat it, it's not profitable, but now we can almost say, or say with some degree of confidence that $3.20 futures has got a lot of value around the world.
Do you have any way to tell right now of how high it can get to keep the Chinese interest?
The question will be, at what state will we be in when they need more corn, and could they come in here and buy 300 or 400 million bushels? Yeah, that would move the market. But right now, we'll probably have somewhere between 1.75 and 1.9 billion bushels of corn left over this year. And of course, feeding is down. The livestock feeding is down somewhat. And they've admitted that they'll buy 1.5 million tons this year, 3.5 million tons next year, which is about 120 million bushels. If we yield again, every bushel an acre is about 160 million, or about 80 million, 85 or 90 billion bushels. So all we need is 2 bushels an acre more in our crop, and we can sell China all that they want next year in 2010 and 11 marketing year, and meet the ethanol projections and feed the cattle. So a quick kicker, like it always is that what kind of yield are we going to get this summer, and then when and how much is China going to buy? And I don't know how high it can go, but I don't think they can use $5 corn any more than we can. A demand base in here somewhere between $3 and $4 in that area that says we can do pretty well. And
but what you just described there, with the potential for 2 bushel more an acre, if we can get that,
yeah.
That means weather market, which we usually see this time of year. We're not seeing that yet.
Not yet, no. And there's some talk of La Nina waning and all that, but I think the market is going to be well supported in here in these levels lower where we're at now, and down to that level where China bought before, until we're pretty convinced that we have a bigger crop than what we anticipate, and then to see more evidence of China buying. And we hear now through some of the sources we have, this buying that we just had now from China recently has been mills and some private people buying some stuff because it's too expensive to transport from north to south in China. However, we're getting inklings now that the government agencies, COFCO and Delenn, and some of those you've heard about, are in the process of doing something. Now, if the government of China buys corn, that has much bigger impact to psychological value of grain and what it may do to the traders in the world than it would be that if some miller comes in and buys 14 million or 14 million bushels of grain, which isn't a lot of grain. And that's what we're looking at. I think that could come about, but it takes time to get that process through the government. And I suspect that that'll come. If it comes, it'll come in this summer, and then they'll be buying grain for next fall and next spring again.
Now, the big oil spill in the Gulf could certainly impact that China trade, but we're not seeing much impact from that yet in the trade either, are we?
I think the bigger impact, perhaps, and it's a significant, is that what it is that was spilled. It wasn't ethanol, and if it had been, you wouldn't have had these problems. And of course, we're getting this ethanol push now in advertising, talking about some things, and it just came at it wasn't designed that way, but it came at about the time. And I'm listening to CNBC and some of the others saying that ethanol is not nowhere near like crude oil, and if we use more in that takes the pressure off of it, odds of less and less spills. And I think that will probably help us in the EPA's decision of whether they want to go from 10% to 15% or somewhere in between.
These are actually two separate issues, but somewhat related, is the situation in Europe, Greece in particular right now, but also the stock market plunge that we saw yesterday and even took a hit today on the market.
Come of the stock market wasn't unexpected to me because we were basically short the market and had waited so long that we decided to take a little bit of money we made in it and stand aside about 3 hours before the market collapsed. So timing is everything, and even though you have the right idea, sometimes your timing is off. One more day and we would have made 20 times what we did, but we do that for people that have money invested in stocks. We hedge it off for them. But this, I think, in the stock market, however, they want to explain it away as basis. Maybe there was a glitch or a fat finger, they call it, where somebody sold 13,000 instead of 1,300. But that doesn't explain why during the same time or prior to that bonds were up strongly, suggesting that you don't dare raise interest rates around the world because we got trouble yet that's still surfacing. And if you pay attention, we had soybeans down 25 cents a bushel long before that stock market crash. In fact, the Board of Trade quit trading at 115. Shortly after that, 3 or 4 minutes, the market fell. So I don't know if it's correlated or not, but there was money looking for someplace else to be. And I think what it showed us in the stock market, we're used to the volatility in grains. 10% move is 30 cents in corn. We got that a couple different times over the years. This scares the equity guy, and probably what it does is makes the small investor really nervous. And it shows us, I think, again, graphically, how tenuous our positions are and how an action by a government somewhere, it didn't have to be terrorism or anything. In 15 minutes, somebody could have lost 10% of their equity, and that's quite a jolt. So I don't think it's over yet. We're going to have to feel our way through this, and the market needed a correction, but nothing like that.
We've just got about a minute left, Jerry, and I know you watch the charts pretty good, and if they're interested in seeing those charts, and just quickly describe what you're seeing there and how they can get a hold of them if they need to.
Talking about on these programs about getting it, and all they really have to do is go to our website, www.gulkegroup.com, and there's a little spot on there that says additional information. Just click on that and say, I want to see the charts, and we'll send them to you. But interesting to me is that if we could take out 390, we'll say in the lead contract in May, we will get a secondary buy signal in the corn monthly chart that we've had initial buy signal for quite some time in it, suggesting that you may have 12 to 18 months worth of stable to higher prices in corn. And for a long time, even going back 3-4 months ago, I asked myself, what could be out there that would cause that to happen? And usually futures do that, and price charts do that. They'll discount the present and looking ahead as what might be. And I said, what could be out there to make corn go higher with maybe a 2 or 2.2 billion bushel carryover next year? Now we're seeing it. We're seeing the Chinese syndrome, so to speak, coming in. And interesting charts in the corn, quite contrary to the soybeans. They got a sell signal a while back on a monthly basis and just can't get a buy signal. And but corn probably, if there's one commodity out there that has a story that is piquing the interest of the speculator, that says, well, for years we underestimated the demand for soybeans by China grossly. By the government and by private people or anybody, always underestimated it. Are we now underestimating the demand for corn? And China says 3.5 million next year. Could it be 5 million? And this will be a new wrinkle to deal with in this price discovery mechanism and the risk. And if this thing turns positive, and it would have to happen in June perhaps, that would be very interesting for us to say, I don't know how high it could go, but I know where it shouldn't go. It shouldn't go below 320 or 350 again for quite some time.
All right, that's Jerry Gulke with the Gulke Group. Thanks a lot, Jerry.
You bet.